Okay, I think we are live. Traders, what's going on, guys? Happy Thursday. We are, it's March 21st. And what we're going to do today is pretty much what we did a little bit yesterday. We went over markets. Today's going to be a little bit more fun. We're going to look at basically what happened during the overnight, right? So we filmed yesterday at around 10 o'clock, and we were looking at the NZD, we were looking at the JPY, and we're also looking at the Euro USD as well. And we were basically hoping to see certain price moves. All right. So guys, if you're new to the stream or if you're new to the channel, make sure you guys subscribe. Very much appreciated. I have here the chat as well. So hit me with as many questions as you guys like. I'll be here to answer them away. All right. So I'm going to minimize my screen real quick. Let's get into it. Boom. Let me know if that's still too big for you guys. Alrighty then. So let's first take a look at our movers. All right, so this is something that I love to do every single morning, which is just try to see exactly what was going on in markets, like during the overnight, right? So 9:30, I'll look back over the past 24 hours and see exactly what happened. As well, we'll go over, maybe certain different economic reports that came out, potentially different news that came out as well. Kyler alerted me that there's some updates happening to the British pound. Yesterday we spoke about the British pound a little bit, but today we might have a little bit more details as to what we want to look at. All right, so if you guys don't know what we were looking for because you weren't on the stream yesterday, maybe go back and watch that recording yesterday, but I'm also going to give you guys an idea right here live. All right, so let's just actually first just take a look at the actual charts. We'll pull up just to see what we got going on. NZD, JPY was something that we were looking at to go long. Right now, we do see that markets are breaking the structure. That's exciting. Euro USD is something as well. It's already over here that we were looking at to see to go long. Also, we have a little bit of markets consolidating. Now, again, the timing element of this, we haven't really spoke about that, right? So if markets trade back down into consolidation, it's not so bad. I'm not sure who potentially, is in these positions, but at the end of the day, this is just what we're doing on our end, right? And so I just also want to, have some type of little risk disclaimer thrown out there. You guys can look at it. It's in the description below. But hey, I want you guys to trade very safe. I don't want you to just, jump and start doing everything that we're doing here on the stream. This is not gospel. This is just our personal analysis. Okay, so just want to make that clear. All right. So NZD JPY looks like it's breaking that consolidation a bit. We were talking about that yesterday. Euro USD. Those are the only two pairs we spoke about yesterday. So it's a pretty simple day for us. Now, overall, when it comes to our biggest movers and whatnot, we didn't have too much action last night. Let's take a look at this real quick. Now, Australian dollar, it has seemed like it has been continuously just pounding to the upside. And again, though, if you guys look yesterday, a decent day. This probably will be one of the larger movers because obviously this is our candle for the day. This is, by the way, I always got to make this clear. This is our Aussie index. Every single thing I'm about to show you guys is an index. Okay. Good morning, guys. Good morning, Champ. Okay, Champ wants me to check NZD USD. I will do that. My man says I've been gone for a while. I know, I know, man. But we're coming back. This is our second day. We're here. We're hitting it 2 days in a row. Later on today, guys. By the way, we actually have an interview with someone who used to work at Lehman Brothers. She's a very, very successful entrepreneur. It's going to be amazing. So check back probably sometime next week for that interview to be done. Again, we're doing interviews with some of the biggest people in finance. We did an interview on Monday with Michael Pinto. He manages millions of dollars of capital. And so it's really exciting to have them here on the channel, give you guys an idea as to what they're doing and how they're weighing capital, right? A lot of you guys maybe have a few $100, few $1,000 in your portfolio. It's good to know what the big dogs are doing with millions and millions of dollars in their portfolio, so that way you can kind of get in alignment, so to speak. So that's very, very cool. There's no channels doing that. I don't see many channels at all, especially Forex channels, that are actually bringing on multi-million fund managers onto their platform. So, but we're doing that for you guys because I want to do everything I can to help you guys learn more about this space and execute well. All right. So, long story short, though, Australian dollar, it did break outside of this consolidated high here. Right. We saw that markets were really having a hard time. Right. Notice that. So let's pull up. Let's just draw a nice little level real quick. So what do you guys think drove markets outside of that structure, right? It's pretty simple stuff. But if we go back and if we look at all of the different currencies, what we'll notice is the Fed and their idea to basically throw capital into the economy got a lot of folks excited, and you started to see some buying on the Aussie. You started to even see some buying on the NZD. Now, the funny thing is, I've been seeing so many tweets lately. Someone mentioned, there was a really funny one that mentioned there could be a meteorite that crashes, in the city of New York, and the market will be up 2%. That's probably the case, right? The Fed will probably print money at the Atlanta Fed, throw some bread over, calm everybody down, throw some stimulus checks around, and everybody will be okay. Because it seems as if the market, it doesn't matter. Who cares about unemployment down? Who cares about jobless claims being, at the highest since, the 30s, 1930s, so to speak? Who cares? So at the end of the day, guys, we're in a crazy world, and we just have to get into alignment with what's happening in the market. Someone did mention on the channel yesterday, kind of going against what Michael was saying, which was, he mentioned we will not see March. We will not see the March lows. And what he also mentioned was economic cycles and and market cycles are not the same thing. And I somewhat agreed with him. Economic cycles can, they're there. You have your debt cycles. We're in a debt economy. We're in a debt financial system, right? And so you have those, ebb and flows of, credit increases based off of monetary velocity being maybe a little bit lower. You have those capacity. You have the areas also where credit decreases, right? The ability to get credit, the ability to get money also increases based off of maybe, the monetary velocity not really being there. So that cycle is there, but it doesn't quite align with the market cycle. And that's exactly what we're seeing right now. Okay. So Aussie, it moved pretty decently during the overnight. Let's see what happened on the Canadian dollar. Real quick, Canadian dollar, stagnant. Look how ugly it has been. We had the massive fall on the Canadian dollar when oil happened. Let's take a look at oil prices real quick, see where they are. Boom, boom, boom. Here, let me see the comments real quick. Let's print some cash. All be good. Fed style. 100%, Ruben. That seems to be the case. Hello, everyone. Why is the market rallying right now? I'm lost. Hey, let me know what market you're specifically talking about, Green. Because if you're talking about the S&P is flat. If you're talking about when you say right now, if you mean like over the past week or so, definitely I can give you some context on that. But if you're talking about at the moment, we don't really see too much activity. But the market just opened up maybe about 20 minutes ago. Tony Bob said, welcome back. Appreciate it, buddy. So let's see oil real quick. We can see right now that oil is running back to 34, right? And so if we look over here at the Canadian dollar, we don't see a really high correlation right now. That's the crazy thing about oil, man. Oil will be extremely well correlated with the Canadian dollar. And then that correlation can totally just, dip out. But if we take a look here, February 21st, we start to see the market slide. And if we head over to, let's see, boom, right here, you have a pretty decent sized down move on oil in January, but you can really see what happened on February 21st. With oil, we started to see the market slide. So for a moment, you had a pretty decent correlation with oil and the Canadian dollar. We hit a low here on the in the Canadian dollar on March 10th. We hit a low here, let's see, on oil, obviously a lot later in April, but we did start to see a little bit of stuttering around the end of March. We saw that first little stuttering here. If you guys can notice that, take a look here. You see a little bit right here, that 23% fib. That fib is not correctly placed. I'll just take it off real quick. But you do see that there has been a little bit of consolidation there, but then we just continued that sell side rip. Now we see markets turning back around here. When it comes to what we have right here with the Canadian dollar, of course, you want to see things maybe start to get correlated again. At one point, we were looking at oil back in March. Again, those are 87% correlation, but then that somewhat stopped a bit. And remember, this is our Canadian index. So this is the Canadian dollar versus everything. Just to help you guys understand again that this is very accurate with knowing exactly where the Canadian dollar, how it's performing, so to speak. So yeah, maybe we want to see a little bit better correlation right now with Canadian dollar and oil, okay? But at the end of the day, why would people start rambunctiously buying the Canadian dollar during times, of crisis? So the crisis in and of itself might be slowing purchasing down. When a crisis starts to pull back a bit, which it seems as if, things are potentially getting better, we have to see if there's a resurgence now that everyone's opening up. Yesterday was the first day that all 50 states had some type of partial opening here just in the U.S. I know we're all over, but we know the U.S. economy drives a lot of this stuff. But we had all 50 states had a partial opening, so we'll see if there's some type of resurgence, but that could take up to 2 weeks, and who knows what the market is really waiting on there. Let's see real quick. I'm gonna hit the questions. I just need to keep running real quick, and then I'm gonna hit your questions real quick, guys. 1 second. But yeah, let's keep an eye on oil just in case we start to see markets continue to really follow the trajectory of what what oil's doing. So let me backtrack. Let's keep an eye on the Canadian dollar so we can see if it starts to follow the trajectory of oil, which we see right now is trading at 34 bucks. Let's continue along. Euro. Now, again, I mentioned yesterday that euro isn't something that I'm running to go buy during the crisis. It's nothing really that I'm paying a tremendous amount of attention to. And when it comes to the Euro USD, we did want to see the Euro USD potentially trade back to the upside a bit, just because of a little bit of dollar weakness we thought was going to come in based off of things calming down a bit here in the US and here in global markets. We will see. We will see. We're not 100% convinced on the Euro USD trade, but we're just paying a lot of attention to it. But this is just our Euro here. You guys can notice we had a massive run to the upside, and then we had a massive sell side move, retraced heavily, and now we're somewhat within that consolidation there. Let's see. Let's see. Okay, cool. So we'll keep moving along. NZD, we do want to see the NZD break the structure. All right. I mean, that's something that I would be really, really excited to see. Let's drop a fib real quick, and let's continue to do a little bit of analysis there on the NZD. Boom, boom, boom. All right. And so again, I'm not sure how many of you guys are using fib, but boy, oh boy, Fibonacci is one of the key components to everything that we do here and everything and exactly how the top traders execute. It's just so useful to understanding, just the overall momentum of markets and how sizable potential pullbacks have been, because that's how you really calculate what market participants are doing and how they're weighing capital, so to speak. We can go into those deep conversations at some point in time. But right now we have the NZD USD. We're sitting at a 38.2% retracement, and we would like to see markets potentially break up into that structure again. NZD, what's the largest trading partner for the New Zealand dollar? It's up there with China, obviously Australia, but it's really up there with China, right? And so if we want to continue to see markets turning around, and if all this optimism is coming in, we should see it start to reflect here on the New Zealand dollar. Now, at the end of the day, China has its own issues in regards to reporting cases, okay? And so that is a factor 100%, and if we find out that China was masking an entire part of its economy, and we see that there were an extra 10 million cases out of China that were unreported, yeah, you're going to see a lot of turbulence there. But hopefully we can start to see trade flow increase in regards to just imports and exports. And then if that's the case, and if things start to pick up in that capacity, then you will start to see New Zealand start that process again of exporting goods, importing goods back and forth through China, which we should see increase there on the New Zealand dollar. So it's something we are paying attention to. And again, remember yesterday, we did mention NZD JPY is something that we want to see break to the upside. We're going to go over that again in just a second. Haven't been paying a tremendous amount of attention to the CHF. We all know here, at least we should know, that the CHF is it's a safe haven currency. So during times of financial risk, you start to see this market trade to the upside. What do you guys notice here? Okay, coronavirus. What do you get? You get this massive run here on the CHF. You now again have started to see markets pull back a bit, and it hasn't been responding amazingly well. Again, it rushed. A lot of individuals rushed into fear when it came to this corona up move. Let's take a look and see if it's correlated with any of our other safe haven currencies real quick, just to make sure that that up move deals with coronavirus. Well, what do we have here, guys? We have right here in time, coronavirus started to go crazy. You have a massive price move on the JPY. Let's go back to the CHF just to make sure that that's around the same date. It literally is the exact same date. So isn't that amazing? We can now understand exactly why our currencies are moving based off of correlation, but then also based off of understanding what's happening on the fundamental side. Again, you don't have to pour your heart into fundamentals. We do, but you need to keep them in your Rolodex in some capacity. And I'm not talking about forexfactory.com. Okay, there's a big difference between forecasting and understanding what's happening in the economy based off of just the facts of, again, trade flow, politics, and the GDP, so on and so forth. Let's see, 1 second, guys. I'm looking at some of the stuff here you guys have mentioned. Cool. Okay. Let me make sure I'm still live. I'm seeing some strangeness. Let me know if you guys can still hear me. I saw the chat slowed down a bit. I just want to make sure that I'm still here with you. Okay, so again, before I keep going, let's see. 3, 2, 1. Someone's about to tell me. Bam, bam, bam. I'll assume it's recording just in case. But yeah, so again, guys, correlations, but then also understanding fundamentals is going to give you a massive, massive edge. Let's see what happened on the US dollar. By the way, again, it's also a safe haven, massive spike there on the USD. So we see the three currencies that people ran to in times of fear. You had your dollar, you had your JPY, you had your CHF. All right. Now I did skip over. All right, perfect, guys. Man, this thing lagged so long. It took about a minute and 10 seconds for that to go over. So I have skipped out on the pound because the pound is really interesting right now. There have been some updates in regards to what's going on with the pound and different things happening in regards to Brexit. But real quick, I want to show you guys what we're looking like on that NZD-JPY. Let's see, NZD-JPY, okay. So, and why we like the NZD-JPY. So yesterday we spoke about economic divergence. Now, again, everything I'm telling you guys on this channel right now, everything I'll tell you guys on the channel is very, very objective. Now, when you maybe get inside of the academy, you will find some subjectivity, when we're in those closed rooms based on what we like and what we want to do. But on the channel, I want to be as objective as possible. And I say that because I'm about to prelude something that might sound subjective in nature, but it's not. Economic divergence is the best way to trade. It's 100% the best way to trade. You want to find a currency that's increasing in value and trade that with a currency that's decreasing in value. I think we all can agree and shake hands and say, you know what, that sounds like a good idea. That's exactly what we're doing here on the NZD-JPY. So we were hoping to see an the New Zealand dollar increase in value based off of everything we just mentioned today. But then we also want to see the JPY continue that sell side momentum, again, based off of what we mentioned today, based off of risk coming into markets basically that aren't really there so much. Okay, here's the JPY again. I didn't quite show you guys the JPY in full disclosure. There we go. So we see that the JPY is holding these lows. Man, oh man, this is the risk. At the end of the day, the JPY has not broke this low here in, we haven't seen markets that low since March, since the Corona. Okay, since Corona really hit off. It's just a leg inside of the coronavirus. So let's see how large this is of a actual retracement at the moment. When it comes to drawing your fibs, sometimes you can go to the wick, sometimes you can go to the body. If the wick is insane, hey, personally for me, I just really ignore it. But most of the time I'm going to the wick. In this case though, I do want to go to the body because that wick is including a lot of price data that I really don't want to include inside of this Fibonacci. Right there, you guys can see we're hitting off on a 50% fib. What's that mean? It could mean a couple of things. Each one definitely has, certain tendencies. Each Fibonacci retracement level has their own tendencies, 100%. Without going into a full-blown Fibonacci training, the 50% fib does let us know that this market is considerably retraced. And based off of the market structure inside of the fib as well, you guys can notice that this bad boy is having a hard time deciding on what it wants to do. Okay, so this is an efficient market, so to speak, right? When you have your JPY stuck in a consolidation, you're met with buyers who are somewhat around the same, somewhat have the same ideas or aren't so strongly incited to continue buying into the market. But same thing with sellers. You have sellers giving up at this 50% retracement every single time. So you have buyers giving up at the 23.6% fib. You got sellers giving up at the 50% fib. Basically, all that means is they don't have, right? Sellers don't have a good enough reason to keep selling. Buyers don't have a good enough reason to keep buying. But what they can do is exist inside of this consolidation, and that in and of itself adds a degree of risk for anyone buying down here at these lows. Now, who's been parading the idea to buy the NZD-JPY? Your boy Cleveland. I've been the guy parading that idea. All right. But at the end of the day, I'm not over here screaming at you guys about, hey, the market could short and we would see this massive break out of the 50% FIP. I'm not saying that. I'm not that, advantageous and excited about that opportunity. But at the end of the day, the combination of the NZD and the JPY gives me a little bit of maybe what we can call hope to see markets turn around a bit. And then at the end of the day, things are changing a bit. And there's a little bit more optimism coming into markets, right? We haven't had anything too economic, right? No economic data coming out in regards to the NZD or the JPY that people are just like parading about. People aren't really paying attention to that. But what they are paying attention to is the overall tone, aka sentiment, of what's happening in markets right now. And so what that means for us is, hey, if the tone or if the feeling is a little bit more optimistic, that's going to affect buying and selling, okay? And so that's pretty much what we're paying attention to. So that's another component of fundamentals and trading fundamentals. It's not all about the data. That's why Forex Factory is not going to make you a profitable trader at all. It's a little bit more about the sentiment and some of the things that you guys see. You guys are very rational people, man. You guys know when people have a good feeling about something and a bad feeling, and that's not going to report on a calendar right now, okay? So we'll keep an eye here on the JPY. Economic divergence is the key to us executing this trade the right way. But at the end of the day, we have something that we really got to fight through, and that is that massive consolidation that we've seen here on the JPY right there at that 50% FIB. Okay, what are your thoughts on that one, guys? We can keep looking at a few more things here. EN long now. So Euro NZD, you're playing Euro NZD. I'll take a look at that really quick. That's an interesting one. So you want to see, you said EN long. All right, so you want to, let's take a look. Euro NZD. I love the abbreviations, and I love the fact that, man, hold on, does this bad boy not have? Let me see. Jeez Louise. We're getting some weird data here on our Think or Swim. Very weird data. Boom, there we go. All right. So this is what we're looking like on the daily. So it seems like we're fairly consolidated on the Euro NZD. It's an interesting look. Obviously, this consolidation, though, as you probably know, who mentioned Ian Long? Mike. Mike, this consolidation is coming in straight from that New Zealand dollar, right? Let's go take a look here at the NZD. Boom, boom, boom. Take a look at that, right? So we have a tremendous amount of consolidation on this NZD. That's quite amazing. Consolidation on the Euro NZD started around, let's see, that's April, right? And we start to see that consolidation right around the end of March on the NZD as well. So we know that the Euro NZD is consolidated because that NZD has had a hard time making any real move. But we do see the Euro trading to the upside. And so this slight move that we see running now to the upside there is causing markets to, have a very interesting effect. Let's see. NZD JPY short. So we have someone, Nathaniel is short NZD JPY. That's cool. You can definitely be short NZD JPY. I totally understand why you would be short NZD JPY. It makes sense when you're looking at the technicals. It makes total sense, right? Because we're up here at the high of the consolidation. You don't think markets are going to break the consolidation for whatever reason, and you want to see markets turn around. Makes total sense. I get it. That's why I love this game of trading. Everyone has their own ideas. What do you think of EJ? Let's take a look at EJ real quick. Overall for the Euro, again, I'm not so much, screaming for the Euro. Man, EJ looks pretty interesting. So before we evaluate any currency, right? So he wants me to look at EJ. We have to talk a little bit about JPY, and then we have to talk a little bit about the Euro. So JPY, first thing and foremost. Yeah, I don't like the JPY so much based on, again, overall markets right now. Now, people could start to buy the JPY just based off of it coming in at this low, right? But at the end of the day, I just believe at the moment markets are still, coming off of and getting a little bit more optimistic, and they're coming out of this Corona deal, and that optimism might breed the JPY to continue to have just a little bit more downside. So I'll go with that for right now. I have a either neutral or very slightly short bias right now on the JPY. If we talk about the Euro real quick, let's see. Euro, yeah, we have had some pretty interesting results in regards to, Italy and Spain when it comes to Corona. And not everything's tied to Corona, but right now we got to admit, folks, who's really paying attention to economics at the moment. Oh yeah, look at the numbers. Everyone knows the numbers are going to be horrific. You know, it's really just about what people see in the future. And obviously people are slightly optimistic about what they're seeing right now with the euro, because we're getting some buys in at the moment, right? So that's interesting. So again, right now for the euro, we will want to see, maybe if you want to go long euro, right? Because you said euro JPY short. So JPY, if you get markets trading to the upside, that means it's costing more JPY to buy your euro, which means you are getting euro appreciation. If you want to see euro appreciation, then yeah, you're basically looking for markets to trade back inside of this consolidation. And it's pretty easy to spot maybe different levels that you might want to see that run to. You can see markets run right up into this area of consolidation. And if you want to kind of just draw up a little line here, and again, these are lines. I hate drawing support and resistance lines. I think everything is really a zone, so to speak, guys. But yeah, we can see markets trade back up into this zone there. Pretty interesting stuff. Pretty interesting stuff. So look, I like the idea of euro JPY wrong. Look, any of this stuff can work out. I just need to know the reason why you want to do it, and then we can have a little discussion as to what you see in markets. And so we'll keep moving. GBP USD. William wants to take a look at GBP USD real quick. GBP USD. Let's see what we got going on in there. Man, GBP USD looks really interesting. So as you guys know, the Brexit happened back in the end of 2019 Q4. Let's take a look and see how Brexit affected markets on the GBP, and then see how that has factored in along with, you know, certain things dealing with Corona real quick. So let's zoom out here for the GBP. Okay. So you get a tremendous amount of sell side that came in on the GBP during the month of March. Tremendous amount of sell side. So you see that coronavirus definitely had a pretty massive impact there. All right, but if we kind of look over and look at 2019 on the GBP, this is GBP USD. Let's go, and that's that dollar strength that came in. So a massive amount of dollar strength came in, which really made the GBP USD look horrific for the pound, but it was just a tremendous amount of dollar strength. This is why we need to isolate the currency pair and go straight to the GBP real quick, just to see what we're looking like on the pound. Exclude that dollar component real fast. All right, so there we go. Now we're excluding dollar, and now we just have the pound relative to everything else. And if we take a look now, we can see we can see clearly a few more things. Take a look at Brexit. You can see Brexit and how it immediately came in and just really wrecked the currency pretty dramatically. And if we move on over, what do we have happening here? Around August 2019, guys, this is when we saw a bunch of stuff coming up for Brexit. A lot of different things happening with Theresa May. I think she ended up leaving out around this time. And you have Boris Johnson coming in, promising that he was going to get everything passed during the month of October 30th. We made a video about that back when we were in Thailand. So if we continue along, again, what do we have? We do have coronavirus affecting the pound quite massively here. So we see that the pound did not perform well during the coronavirus as a safe haven currency. So that's awesome to be able to see that immediately. And then boom, you see a massive spike here in December. Okay, I hate that there's so much volatility on this pair right now, because you can't really see what's going on the way you should want to. But notice this right here. We have a massive spike coming in markets. And that massive spike that came in markets has everything to deal with the actual Brexit potentially being passed at the end of Q1 this year. Okay, so that's pretty interesting stuff there. One second, guys. I don't want any crazy spammy stuff going in the chat. All right, cool. Yeah, so that's what we're looking like on the pound. Again, pound right now, again, somewhat it is consolidated. If we pull back and I kind of show you guys a little bit more about where we are in regards to that consolidation, but when we are sitting near some lows, pound could probably be a pretty decent looking buy opportunity, especially if you're thinking that risk is going to slow down the buying, risk being off is going to slow down the buying of the dollar at the moment. You might see a little bit of pound to the upside. So let's head back over to the GBP USD and kind of give a final result here for the GBP USD. GBP USD again. So let's just factor everything in. This massive sell side dealt with dollar strength, but also dealt with the GBP not performing well during the corona. So we can see that the dollar did amazing during March. Obviously has pulled back massively, but the pound did not perform well. A lot of money left the pound during the coronavirus time. So now you're just looking for a rebalancing if you want to go back long. If you're not optimistic about what's happening right now during in regards to just overall where we should see markets go over the next few months, then maybe you think that the dollar's massive retracement here. Let's take a look at the dollar. Maybe you think that this dollar's massive retracement, let's pull over, go to the 1 day. Maybe you think that this dollar's massive retracement right here is going to somewhat rebound a bit, right? So we have consolidation, and then now what? Are you expecting an up move? You're expecting that, hey, markets are still going to, not do so well. If you think that's the case, then you're going to agree with Brent Johnson. We had him on the show, on the channel just a few weeks ago, and then Michael Pinto as well. Michael Pinto, again, he hates that they're printing money, but at the end of the day, he understands that dollar strength should start to come in, based off of if you think pessimistically about where we're going in the economy. So George understands that there is a little bit of correlation, negative correlation, with the dollar and with the S&P 500, and so our S&P 500 is doing very, very well right now because of the Fed's manipulative tactics on just kind of printing money and throwing it into the economy. That's giving the drones, the sheeple, a lot of confidence that the market's okay. And so that has just allowed for markets to stabilize a bit. Pretty interesting stuff there. Yeah, guys, any questions, man, you guys just let me know. Again, for me right now, if you guys want to ask Cleveland, what are you looking at? I'm, again, still paying attention to that NZD-JPY. That's something that I really want to see. NZD, let me show you guys real quick. NZD-JPY, again, I'm paying a lot of attention to this move, man. Again, I understand anybody that wants to short this market right now because we're at the high of this consolidation. I totally get it, and so when we start to see markets trade a little bit higher, we'll probably start to put those positions on. Then I'll let you guys know how we manage that. But if we start to see markets trade a little bit higher, then yeah, we'd be excited to see, hopefully that continuation, at least back up into that 50% retracement level. And, when it comes to technicals, guys, we talk a lot about fundamentals. Technicals are very, very important because market participants pay a lot of attention to these past areas of price, 100%. It's just you have to throw a little bit of the underlying of what's happening in markets, which is the fundamentals, into the mix to get a very clear decision. Take a look at the massive engulfing candle that we're seeing this week. All we're looking for is a slight continuation. It's not, that's it. We're looking for a very slight continuation. We have not seen in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 10 weeks. We haven't seen in 10 weeks this amount of bullish activity on the NZD-JPY. So, hey, this is kind of our precursor, our sign that at least just gets our attention to kind of want to see something else. Zombie market, George. Zombie freaking market, man. So, yeah, guys, if you guys got any questions, again, totally let me know. So tomorrow, we're going to have a really great time tomorrow because tomorrow we're going to do an in-depth overview of exactly every single little price move. If we've had over a 200 pip price move on any one of the currencies, specifically we're going to be talking about the euro. So we're just going to do an overall economic overview on the euro, and then each day until the end of the week. This week, today's Thursday, so tomorrow, Friday, we'll do a Friday recap of seeing exactly where markets went and what the best opportunities were. Again, we are not exposing to anything right now. I want to get some exposure. I want to get in this game right now with the NZD-JPY, but specifically this week, we haven't had any exposure. But tomorrow we'll do a little bit of a recap of what exactly has gone down throughout this third week of March. But then also we're going to do a very in-depth overview where I'm going to go to trading economics. I'm going to show you guys exactly how well positioned or how well it's not positioned the euro is, and you guys are going to really understand from an economic perspective what's happening on the euro. And then every day, probably about 2 or 3 times a week, next week, we're going to do a very, very in-depth overview on a particular economy. It's going to be like a little macroeconomics lesson for you guys, where we're going to specifically talk about that particular economy. We'll go back years, probably a decade and a half, 15 years. The euro came into existence in 1999. We're going to go over the entire currency and exactly, where it's been, why it's where it's at. And that's just going to allow you to understand from a very, very critical point of view what's happening with that currency. And you're just going to know from moving forward, it'll be a lot easier for you to keep up with what's happening in the euro if you know exactly where the euro is. We're going to talk about the 2013 Southern European crisis. We're going to talk about the Eurozone in overall and having a single currency for all of these different countries. There's a lot of information that we can go on with the euro, and then we're going to do it for the CAD. It's going to be some exciting stuff. So I just wanted you guys to know a lot more about what's happening in these particular economies. And and that's again going to give you massive insight. So there you go, guys. Let's do that. Let's do that. Tomorrow we'll be here. If you guys got any questions, let me know. Yes, Twinkies, man, I love these freaking names, man. Twinkies, yes, we're going live next week, man. Monday through Friday, we will be going live. Yeah, so New Zealand as well. Good job, George. I like the idea of that, man. So George mentioned 0 new cases in New Zealand at the moment, okay? George wrote that in pencil, okay, not pen. New cases could pop up, but right now we don't have too many new cases in New Zealand, okay? Can you explain or do a video on the Oanda platform? I'm finding it hard to understand their unit size compared to lot sizes. Yeah, so Oanda does things a little differently than other brokers. Oanda lets you execute trades down to like $1, so the unit size is a little bit different. So lots, let me just kind of go over that real quick. So when it comes to lots, of course you have your micro lots, your mini lots, and your standard lot. That is just a simple unit of measurement to kind of help you understand a little bit more about the size that you're playing with. When I used to work at Loma Management Partners, they had business partners that were talking in yards. Okay, so it goes micro, mini, standard, and then yards, Y-A-R-D. A yard is $1 billion position, right? It's crazy. So it jumps from $100,000, and this is the retail numbers, by the way. On the institutional side, they don't talk micros, minis, or even barely even standards. They talk half a yard, quarter yard, so on and so forth, because they're trading with so much money. But there's another standard unit of measurement called a yard on the institutional side that deals with $1 billion of capital. It's pretty interesting stuff. You guys can Google it, and it'll pop up there as well. So basically for the retailer, though, the micro, the mini, and the standard lot just helps people understand a little bit more about how much size they're putting on. But at the end of the day, as you guys know, you can have 66,000 units. 66,000 units is technically 6 minis and 6 micros, right? And so that's where it starts to break down. This whole unit of measurement starts to, seem a little bit silly, because with Oanda, you can have $1 position or $100,000 position, right? And anywhere in between. And $100,000 position, of course, is a standard lot. So $78,000, 78,444 units. Well, that's 7 minis, 8 micros, but then just a few bucks, right? Because we don't go down to that measurement. So that's basically what Oanda is doing. So anytime you see you have 10,000 units. Who asked that question real quick? Oanda, Kobe. Anytime you see 10,000 units in Oanda, basically that's a mini lot, right? And so on and so forth. They just don't have it to be that particular. Let's see. Okay, Mac asked a question that probably deals with economic divergence. If I expect 2 different currencies to go in the same direction, where can I expect the pair to do? Great freaking question. Does the stronger currency take over, or does it go sideways for a while? Great freaking question. You pretty much answered it, man. You're right there. Okay, so if we have the euro getting stronger and the dollar getting stronger, you actually have consolidation. And so what we'll do, there'll be a day where we maybe just go over economic divergence, but you actually have consolidation when you have 2 currencies getting stronger. Now, like you mentioned, if one currency is getting stronger at a faster rate, right? If one currency is substantially stronger, exactly, Mac, it's going to actually overtake the actual currency. But with economic divergence, what you want is one going one way, the other going another way. Boom. I'm actually going to show you guys the biggest trade that I've ever taken based off of economic divergence. GBP JPY. Let's go back a bit. I want you guys to see this. This was maybe back in, this probably was about 4 or 5 years ago, where economic divergence really showed its hand. It was insane. Let's see. We're still in 2019. Let me go to the weekly time frame. Do you know any 1 to 500 leverage broker recommendations? Man, I can't say I recommend 1 to 500 leverage at all. But if I were to recommend 1 to 500 leverage, there is a highly regulated broker by the name of Blueberry Markets. I know the founder over there. We talked to those guys. We have, we've been sending people to Blueberry Markets for over a year and a half, and not one complaint. Not one complaint. They have the highest rated, they have the highest broker review in terms of, being a good broker. I think they're 4 out of 7 stars, when it comes to different review sites like Trustpilot and all that stuff. Blueberry Markets, they have 501 leverage. They're out of Australia. They have the Australian regulation, the hardest Australian regulation. So, hey, I'll check out Blueberry Markets. We have their link in our description if you want to use the link below. But real quick, I want to show you guys something on economic divergence very, very, very fast on the GBP JPY. and it deals right here. Uh-oh, one second. How many platforms do you use? Man, I'm kind of all over the place because, you know, we're in options trading. We're trading FX, so we'll play with Thinkorswim. We'll also play with, of course, just kind of like TradingView just to see our indexes, so on and so forth. Yeah. Sasha mentioned IC markets. I like IC markets as well. They're super regulated. But man, oh man, if you guys knew the numbers these brokers were doing, IC markets, I saw some shit, man, and these brokers are making money. IC markets is huge. It is a huge, huge organization. Sorry, I'm trying to talk to you guys. I'm just opening and closing this. All right. Well, first, here's our GBP JPY. Let's take a look here at a GBP JPY. Let's look at the JPY real quick. Let's take a moment where the JPY was falling. So we have right here November JPY sell side at the end of November 2016. But head over to the GBP. 2016 November, there it is. That's what it was. Okay, so we have November up move. Okay, so it was after the Brexit vote in November. So here we got Brexit right here, right? I want you guys, so Brexit is distorting the chart, right? This is the thing about the charts. Brexit's distorting the chart pretty heavily. But this is a pretty large up move right here. Let me just get Brexit out. How do we do that? Boop, there you go. So that's a pretty decent size up move right here. And this happened, let me move this over. This happened in the month of November, right? So if we go to the JPY and we go to the exact same time in the month of November, right? You see we have a tremendous amount of sell side, right? So let's actually go over now to the GBP JPY. Remember, those are opposites, right? So we go to the GBP JPY and look how enormous the freaking price move is, okay? So you have markets trading at 127, right? Guys, this thing ended up at 147 in literally 7 weeks. Notice how all those enormous price moves that we saw in the JPY, you see all this nonsense happening on the JPY, huge price moves, okay? And even on the GBP, there's been price moves that were pretty dramatic. Look how huge that is. Look how huge that is. The key point, though, is that they weren't in that negative correlation at the exact same time. When they're in that negative correlation at the exact same time, when you head over to the actual currency pair, notice it looks like the largest move on the entire chart. That is economic divergence. Fairly simple, pretty objective, and you want to find those moments, and that's what we do, and that's what we help traders do. We know how to exactly time when those moments are happening, so every time almost you place a position, you literally have it basically either making money, either you're going to make money or you're going to lose money. That's the great thing about it. Usually it doesn't sit there right there in the middle because you're usually trying to catch a currency that's going absolutely bonkers to the buy side with a currency that's going absolutely bonkers to the sell side. And this is what patience is all about, guys. We see right here that there are moments like this that happen. If you're patient and you sit back, I know everybody wants to trade every single day, you know, and we want to push a tremendous amount of content. But if we were to push the amount of content as often as we traded, you guys would think this is the most boring channel on planet Earth because we like to sit in huge positions and just let them ride out, you know, and that's how we're able to have, you know, 5-figure profits on any one position because we like to let them ride when those moments come about. Okay, so that's economic divergence. This is gonna you guys are gonna have the ability to basically replay this. So if you need to go through that training again, where I just did it, it was pretty simple, right? But yeah, if you want to go through that again, you can just come back and watch the video. Yep. Let's do it, guys. Okie dokie. Folks, this was a good one today. As long as I leave these feeling like I gave you guys some tremendous value, I feel pretty happy. All right. Tomorrow, let's do a Friday market recap. Let's do a Friday market recap tomorrow. Let's talk a little bit about what happened throughout the week. I'm going to have 1 million tabs up tomorrow because I'm going to prepare for a little bit of economic let's do some economic research. I have a bunch in my head, but I don't want to start popping up the browser. So let's see what goes on there, and plus it could lag up the whole system. I got dual. I don't have the best Mac. It's touch bar, but I should have a PC for this. So yeah, let's do the let's do that tomorrow. Let's do a little recap. Let's go deep into the euro. If it takes multiple days for us to do that Euro economic analysis, then we will do that. So there might be a part 1 tomorrow, and then we'll have a part 2 on Monday, and then we'll move to the next economy. And that's going to be massively helpful for you guys. So make sure you guys come back tomorrow, 9:30, right when US session pops off. We'll take a look at it. Let's see what's happening in markets at the moment. Not much. Where's our S&P at the moment? S&P is flat. Pretty flat day, pretty flat 24 hours. Our best moving currency from yesterday's live to today was the Australian dollar. But outside of that, we haven't seen too much action, which is pretty interesting stuff. Again, this is our Euro, this is our ES, our S&P 500 for the United States. S&P 500 right now, we want this thing to pop off at 3,000. Hey, again, if they're going to keep printing money, and if we end up passing that Senate bill, then guys, at the end of the day, yeah, we're going to have this market touch 3,000. It's kind of obvious. So let's keep an eye out on that as well. And so eventually we're also going to start talking about stocks. We're going to head over to the trade tab. We're going to start talking about options trading. There's a lot of stuff that, there's a lot of capabilities here in the Thinkorswim platform. And that's why I love the Thinkorswim platform, man. Okay. So yes, Twinkies, I am more of a swing trader. Dude, I love your name. I love saying the name Twinkies. Yeah, sorry, Emmanuel. So we're going to be live 9:30 every single morning, Monday through Friday. You can expect 9:30 Monday through Friday. All right. Let's do it, folks. Alrighty then. Ace Ventura style. Okay. I will talk to you guys tomorrow, 9:30. I'll see you guys tomorrow. We're going to be pushing out an interview with Kristen. She used to work at Lehman Brothers. She's an absolute beast. We'll talk to her. And if you guys have any questions for Kristen, put them in the comments on some video. I'll get the notification, and we'll keep moving. Okay, guys. Love you guys. We'll talk tomorrow. Trade safe. Okay, let's keep an eye out on that NZD JPY and the Euro USD. Okay, let's keep an eye out on those. Talk to you guys soon. Okay.